All right, let's dive into one of the biggest, most talked about turnaround stories on the Indian market, Suzlon Energy. This is a company that went from being buried under a mountain of debt to suddenly talking about market dominance. So the big question is, how on earth did they do it? How did a company on the brink of collapse suddenly land a massive multi-gigawatt order book? Let's break it down.
And look, if you need just one number to get what's happening, this is it. An order backlog of over 6 gigawatts. I mean, that's huge. This isn't just a company getting back on its feet. This gives them clear revenue visibility for the next 2 to 2.5 years. The game has totally changed from just surviving to actually winning.
And this really is the key, right? The whole story has shifted from one of hope, we hope they survive, to one of quarterly delivery. The market isn't interested in promises anymore. It's watching the execution. So here's how we're going to tackle this. First, we'll unpack the bull case, what went right. Then we're going to flip the coin and stress test this whole story with the bear case. And finally, we'll boil it all down to the single most important thing you need to watch going forward.
Okay, so let's start with the bull case. How did Suzlon pull off this incredible shift? Well, it wasn't just one thing. It was really a perfect storm, a powerful combination of smart financial moves, great strategy, and frankly, being in the right place at the right time. The first step, and honestly the most important one, was this financial cleanup. Just look at the difference. Back in 2021, pretty much every rupee of cash flow was just going to service their debt. By getting that under control and becoming net debt-free, they suddenly unlocked all this capital. And that cash could finally be poured back into the business, into R&D, into expanding capacity. This move enabled everything that followed. So now, with a healthy balance sheet, Suzlon was in the perfect spot to ride this massive wave of India's renewable energy goals. We're talking a 500 gigawatt target. As the market leader with a solid 32% share, they're basically the #1 beneficiary of this huge, long-term government push. This isn't a short-term blip, it's a runway for growth that stretches for years. Okay, so you've got the clean balance sheet, you've got the huge market tailwind. What's the game plan? Well, Suzlon's strategy is pretty brilliant, actually. It's built on 2 pillars, what they call a defensive moat to keep things stable, and an offensive engine to drive that explosive growth. Let's look at each one.
So the defensive moat is all about stability. Think of it like this. Their massive operations and maintenance business, that's 15.2 gigawatts, brings in steady, high-margin cash flow, almost like an annuity. It acts as a buffer against the ups and downs of just selling turbines. And the acquisition of Renom, that was a power move. It let them start servicing their competitors' turbines, which just massively expanded their potential market.
Now for the exciting part, the offensive engine. This is what's fueling that incredible growth. Their new S144 turbine is the hero product behind that record-breaking order book. They've also been smart about localizing their supply chain to avoid global disruptions, and they've even started making their own blades to cut costs and protect their margins. On top of that, they're using all the data from their monitoring systems to offer predictive maintenance, which is a real competitive edge.
Okay, the bull case is strong, you can't deny it. But a good analysis means playing devil's advocate. So it's time for a reality check. What could actually go wrong here? What could derail this incredible growth story? Let's really stress test this thing against the major risks.
The whole bear case really boils down to 3 things. First, the supply chain. They still rely on some imported components like rare earth magnets. Any bottlenecks there could slow them down. Second, competition. You've got big global players like Envision and Sony who could get aggressive with pricing and squeeze margins. And third, infrastructure. This one's a biggie. If the government's green energy corridor gets delayed, that's the grid that moves the power. Then projects can't get commissioned and revenue gets pushed out. That would definitely hit their quarterly numbers.
So we have a really powerful bull case on one hand, and some very real risks on the other. So where does that leave us? Let's cut through all the noise and distill this entire analysis down to the one single metric, the key deciding factor that's going to tell the story over the next year.
And here it is, 30%. That is the number. That's the volume growth that management has promised the market for the next fiscal year. This is it. The conversation is no longer about the turnaround. It's purely about whether they can execute and hit this target. This is the metric that matters most right now. Which brings us to our final critical question. The turnaround story, it's done. It's written. It's in the history books. But the market already knows this, and it has priced the stock for near-perfect execution. So, the ultimate question isn't about their strategy anymore. It's much simpler. Can management actually deliver on that 30%? That is what everybody is going to be watching.